Generally, you could say that I'm long Bitcoin. I think MicroStrategy is getting close to having invested $4.7 billion of cash, of real money in Bitcoin, just slightly less, something like that. And I bought the 17,732 Bitcoin, back when it was about below 10,000. So I probably invested $175 million of cash at that time in Bitcoin. Obviously, we're long-term, so it doesn't really matter what you spent to buy it. It matters more about how many Bitcoin you have and whether you're still holding the Bitcoin when Bitcoin hits $1 million a coin or 10 million a coin. I don't think it's very wise to sell Bitcoin. I'm a Bitcoin maximalist, and so Bitcoin maximalist means a lot of things to a lot of different people, but certainly what it means from an investor point of view is I view Bitcoin as the apex asset. So MicroStrategy is a public company. Our strategy is literally to acquire more Bitcoin. Our strategy is not to trade. Our strategy is not diversified investments in a portfolio of technology companies. Our strategy is very simple. We're a levered long Bitcoin operating company. So if you think about us, comparing us to like a spot Bitcoin ETF, a spot Bitcoin ETF would only own Bitcoin, but it would be unlevered and it would charge you a fee. And our strategy is we use intelligent leverage. For example, we borrowed $2.2 billion at 1.6% interest blended. So we have very intelligent leverage, long-term, not mark to market. And then we buy Bitcoin with it. And then we don't charge a fee. And we generate a premium because when we generate cash flows or we do accretive financings, we then convert that into Bitcoin for the benefit of our shareholders. So MicroStrategy, the public company, we have a transparent strategy. And the key with a public company is when you adopt a strategy, you need to be consistent. You need to be transparent. Like, for example, if I created a REIT that invested in premium office space in New York and London, and I raised capital for that, you would want me to invest in premium office space in New York and London. And if I said, oh yeah, the market is, I got the point where I'm going to sell that and buy Kansas City farmland, and now I'm going to trade some digital assets or whatever, you would think, I can't really trust this company because I don't know what they're going to do. And if I don't know what they're going to do, then I don't want to invest my capital with them. So it's very important for a public company to have a strategy, to be understandable, and to be consistent in that strategy and transparent. So MicroStrategy's strategy is acquire and hold Bitcoin. By any means accretive. By accretive, it means, when you get done with the transaction, you want your public company shareholders to feel like they have more Bitcoin per share, or they have accreted their Bitcoin holdings and not diluted their Bitcoin holdings. And with regard to myself, I'm long Bitcoin, man. like everybody else, I'm wishing I had bought more Bitcoin when it was 9,500 a Bitcoin, right? It's, ultimately, it's the best thing you can do.
Michael Saylor mentioned MicroStrategy's staggering investment of $4.7 billion in Bitcoin represents more than just numbers. It's a calculated long-term vision. Saylor's initial investment, when Bitcoin was below $10,000, highlights an early belief in Bitcoin's potential. But there's more to it. Being a Bitcoin maximalist, as Saylor describes, goes beyond mere investment. It's a philosophy. A belief in Bitcoin as the apex asset in an ever-changing digital era. What's crucial here is the consistency and transparency in their strategy. This isn't about short-term gains, it's about a steadfast commitment to an asset they see as the future of finance. This brings us to a key question. In a world where diversification is often preached as the golden rule of investment, what makes MicroStrategy's one-asset focus viable? And importantly, how does this align with your investment philosophy?
Let's talk about performance, though. For example, since MicroStrategy bought Bitcoin, we entered the market August 10th, 2020. And so what's happened to all these asset classes when you think about diversification? Well, between August 10th and October 31st, when we published our results on our quarterly result of MicroStrategy, then Bitcoin was up 192%. And that works out to a compounded annual growth rate of more than 40%. And the S&P is up 25%. And the NASDAQ's up 17%. Gold lost 1%. Silver lost 18%. Bonds lost 24%. So in terms of asset classes, Bitcoin is outrunning all of the other conventional asset classes. And if you invested in anything other than maybe Magnificent Seven, you're just not keeping up with inflation. But the Magnificent Seven stocks, if you look at them, while Bitcoin was up 192%, Google was up 68%. Microsoft was up 62%. Apple was up 51%. Meta Group was up 15%. Netflix lost 15%. Amazon lost 15%. So big tech doesn't look like such a good diversification versus Bitcoin. And, so how'd MicroStrategy do? Well, MicroStrategy was up 242%. So we actually outperformed Bitcoin. Why? Because we're levered long Bitcoin, right? We used intelligent leverage. We borrowed money to buy more Bitcoin. We didn't just put our assets into Bitcoin. We found a way to borrow $1 billion at 0% interest and buy Bitcoin, right? So if you can do that, I highly recommend you do that. The caveat being, you can't borrow the money at 0% interest if it's a margin loan, because you might get wiped out on Saturday night while you're sleeping. It can't be a mark to market. It needs to be like a 7-year, 9-year, 5-year term loan that isn't mark to market for that to be intelligent leverage.